Hey guys, and welcome to another episode of T4 Trader. Did you know that the markets usually trend only 15 to 30% of the time? And that 70 to 85% of the time the markets are usually ranging or moving sideways? We all know that trading with the trend usually increases the win rate of any strategy, and that the majority of losses usually come when the markets are ranging. But more often than not, identifying trending markets to trade and consolidating markets to avoid is easier said than done. In 1995, the legendary trader, Will Williams, faced the same problem. He couldn't identify trending markets to trade, he couldn't identify ranging markets to avoid. So he decided to create an indicator to do the work for him, and he called it the Williams Alligator, named after a real-life alligator. This is a real alligator and this is the Williams Alligator. Did you see the similarities between the two? Oh, to add the indicator, we just click here, then type here, Williams Alligator and select this one by TradingView. So just like a real alligator, the Williams Alligator has both the jaw, the teeth, and the lips. This blue line represents the jaw. It's usually a 13-period moving average that's been offset to the future by 8 periods. This red line represents the teeth, and it's usually an 8-period moving average that's been offset to the future by 5 periods. Then this green line represents the lips. It's a 5-period moving average offset to the future by 3 periods. These numbers are not random. There are actually numbers from the Fibonacci sequence. If you don't know what that means, it's basically a sequence of numbers in which each number is the sum of the two preceding numbers. The simple sequence is so important that it has various applications in computer science, biology, and art. Even the famous Fib retracement indicator uses numbers from the Fibonacci sequence. Why this indicator is so powerful is because it does not only identify trends in the markets, but it also identifies consolidating markets. The Williams Alligator has two main purposes, both of which are analogous to the daily routine of an alligator, or real alligator. The first purpose is trend identification. This blue line or the jaw is the main feature of the alligator indicator. When it crosses below these other lines, it indicates the beginning of a bullish trend. Now the traditional way of using this indicator to trade is like this. When the green line crosses the blue line upwards, you take a long trade, and when the same green line crosses the blue line downwards, you take a short trade. But using this indicator this way will probably get your portfolio into a lot of trouble. One of my favorite strategies I like to do with this indicator is the pullback strategy. Here's how it works. For a long trade, first you want to make sure that the lines are spread further apart like this, with the blue line at the bottom, the red one in the center, and the green one at the top. This basically indicates a strong bullish trend, an analogy to an alligator feeding on all the bears that are taking short trades. Sorry, bears. Next, we want to wait for the price to pull back to the teeth, this red line, without touching the jaw, this blue line. After the pullback, we want a candle to close above the lips, this green line, and then we are going to enter a long trade on the open of the next candle. So right here, the stop loss is going to be set just a few pips below the most recent swing low. With this strategy, we're not going to say take profits, we will basically exit the trades when this green line crosses below this red line. So let's play this out to see how long it's going to take for it to cross. So right here, we can see the green line cross below the red line on this candle. This is where we're going to exit the trade. The risk-to-reward ratio was 1 to 5.8, which is really good. For a short trade, we're going to do the exact opposite. So first, you want to make sure that the lines are spread further apart like this, with the blue line being at the top, the red one in the center, and the green one at the bottom. This basically indicates a strong bearish trend, and it's an analogy to an alligator feeding on all the bulls that are taking long trades. Sorry, bulls. Next we want to wait for the price to pull back to the teeth, this red line. without touching the jaw, this blue line. After that pullback, we want a candle to close below the lips, this green line, and then we're going to enter a short trade on the open of the next candle. So right here, this top loss is going to be set just a few pips above the most recent swing high. Just like the long trade, we will exit this trade when this green line crosses above this red line. So let's play this out to see how long that's going to take. So right here, as you can see, the green line crossed above the red line on this candle. This is where we're going to exit the trade. The risk to reward ratio was a whopping 1 to 7.5, which is next level. The strategy shown in this video is just one of the many strategies you can do using this indicator. You can even use it alongside price action, or support and resistance, or smart money concepts. The opportunities are endless. What do you guys think of this indicator? Let us know in the comments section below. If you found value in this video, hit the like button below and consider subscribing to stay tuned. Thanks for watching, and I'll see you guys next time.